Hello and welcome back to another video from Funding Store. Today another in our series explaining the different business funding options available to businesses, and we're going to have a quick look at merchant cash advance. Well, let's start by taking a quick look at what a merchant cash advance is. A merchant cash advance is an alternative source of short-term business finance. It's sort of equivalent to a short-term business loan, although they're not quite the same, as we're going to see shortly. A merchant cash advance, or MCA, company will advance you a lump sum of money in exchange for a percentage of your business's daily credit card income, and this amount is taken on a daily basis. Also, it's worth noting that the amount taken is usually directly from the credit card processor or the credit card terminal at the point of sale, and so the MCA company will tend to have a relationship with these companies. And so the reason it differs from a short-term loan is that the MCA provider is purchasing your future credit card sales from you in the present. So it's not quite the same as a traditional loan, if that makes sense. So in order to illustrate this, because this may sound a little bit long and boring, I'm going to take an example which will hopefully illustrate what an MCA is and also when one might be appropriate. So as usual, we start with our entrepreneurs, as you can see here in the presentation. These entrepreneurs happen to be business owners in the retail sector, and for our example, we've called it Cameras R Us, and they sell cameras, no surprise. Coincidentally, the retail industry is quite typical for users of merchant cash advance, as they tend to collect money on a point of sale basis, meaning that they do not generate invoices, so can't use, for example, invoice finance, as they do not have invoices to use as security and thus cannot borrow against these invoices. Also, unsurprisingly, in retail, businesses tend to take quite a considerable amount of money or percentage of income through card transactions. However, it's definitely not something applicable only to the retail industry. It can be used in other industries as well. So coming back to the example, our entrepreneurs and business owners there, they may need short-term funding, for example, for expansion, or maybe they're having cash flow issues and need working capital in the short term. So our business owners can apply to a merchant cash advance company, as you can see in the diagram, and in exchange for that application, which will inevitably include past credit card statements, etc., the MCA company will advance them, in this example, £100,000. Okay, so that's great for our business owners. They now got £100,000 sitting in their business account. So how do people pay for cameras? Well, of course, people pay in cash, but typically, and especially in more recent decades, the majority of purchases are by credit card, as you can see in the diagram. So this will include a terminal at the point of sale. So for convenience, let's say that the cameras that Cameras R Us sell cost £100. So £100 will be taken on this card terminal at the point of sale, and for every £100, £90 in this example will go back to the Cameras R Us, to our entrepreneurs, and £10 will go to the MCA company, and this will be taken daily. Note that nothing actually has to be done by entrepreneurs, as the money is collected on a daily basis and is automatically taken out of the amount that they're collecting on cards, and this amount is automatically repaid back to the MCA provider. For this reason, MCA companies tend to have agreements with card processors. Okay, so this process will continue until the company that has advanced £100,000 to our entrepreneurs has received their £100,000 back, plus interest, of course, hence why they do it. Hence, the providers of the merchant cash advance have paid £100,000 to buy £100,000 plus interest worth of the business's credit card sales. So in brief, that's how a merchant cash advance works. A lot of people ask us whether merchant cash advances are good or bad. Well, as with most things in finance, it's difficult to generalise, as they're very circumstance specific. But in this video, we're going to take a quick look at some of the main advantages and disadvantages. Let's start with the positives. So the main advantages: applications tend to be processed quickly, which means that if the application is successful, you'll tend to find the advance in your business account in a relatively short period of time, ranging from maybe 24 hours up to about 5-6 days. Also, for a merchant cash advance, you don't always require a business plan with your application, and they'd also consider businesses with imperfect credit scores. Also, as you're borrowing on the back of future sales, this is a type of unsecured loan, and therefore no security is actually required. This means that it can be good for short-term cash flow problems and also for businesses experiencing rapid growth. Finally, and possibly one of the biggest advantages of a merchant cash advance, is that the amount repaid to the provider is flexible with your sales figures. So if you're having a period of high sales growth, you'll be repaying more of the amount you borrowed, whereas if sales are slow, you'll be repaying less. So if we could turn quickly to the negatives, the interest rates offered on a merchant cash advance are typically higher than those offered by traditional lenders, for example, the banks. And this is a reflection of the fact that a merchant cash advance is unsecured and in its nature typically higher risk. So there you have it, a merchant cash advance in a nutshell. As always, if you've got any further questions, please do give us a call on 01565 756 141 or go to fundingstore.com, where we have a number of merchant cash advance providers and you can find the one specific to your business needs.